What's up, money rebels? It's your favorite financially cynical Gen Z sensei back to drop some truth bombs. Today, we're talking about something most financial gurus whisper about or just ignore, because, why rain on the bull market parade, right? We're diving deep into how the smart money actually profits off economic recessions while everyone else loses their actual minds. Yeah, you heard me. While Karen from accounting is stress-eating her way through her 401k statement, and Chad from sales is liquidating his crypto at an all-time low, the real players are sharpening their knives, loading up their war chests, and getting ready to feast. Because recessions, my friends, aren't just periods of economic doom and gloom, they are the ultimate wealth transfer events. And if you're watching this, you're about to get a piece of that pie. Section 1, The Harsh Reality. Recessions are not a bug, they're a feature. First, let's get one thing straight, recessions are inevitable. Like bad dating experiences or your internet provider slowing down your speeds, they're just part of the cycle. The economy breathes. It expands, it contracts. It's not a linear upward trajectory, no matter what your boomer uncle told you about his mutual funds. And honestly, anyone who tells you differently is either selling something or hasn't lived through enough cycles. We've had 10 recessions since World War II. 10. So why do we, as a collective, act surprised every single time? Because the media sensationalizes it. They thrive on fear. Markets crashing. Job losses mounting. We're all doomed. And most people, bless their little cotton socks, absorb that fear and react impulsively. They sell when things are low because they can't stand the sight of their portfolio going down. This, my friends, is the biggest mistake. It's like selling your house when it's literally on fire, then wondering why you got pennies on the dollar. The smart money? They see the fire as an opportunity to buy the land cheap, knowing it'll eventually be rebuilt. They understand that market downturns are simply sales events for quality assets. Think about it, during a recession, great companies don't suddenly become bad companies. Their stock prices just get hammered by panic. This is where opportunity knocks. But you can't just stumble into this. You need a strategy. You need a plan. And frankly, you need the emotional fortitude of a Zen master mixed with the shrewdness of a street vendor during a going-out-of-business sale. Section 2, Pre-Recession Prep, Arming Your Financial Bunker, Before the OSHT Moment, ***. You don't wait for the tornado siren to start boarding up your windows, right? Same with your finances. The smartest investors are already preparing for the next downturn, even when the sun is shining. This phase is all about defense and positioning. Cash is king, and queen, and the entire royal court I know. Cash loses to inflation. Opportunity cost. But in a downturn, cash is liquidity, it's optionality, it's the ultimate dry powder. While everyone else is scrambling, you're sitting on a pile of money, ready to deploy. Aim for more than just your emergency fund. Think 6 to 12 months of expenses, plus a separate opportunity fund. This isn't just for emergencies, it's for buying assets on sale. This cash lets you sleep at night and pounce during the day. Deleverage your life. Seriously, ditch the high-interest debt. Credit card balances, personal loans, these things will crush you when the economic tide goes out. Lower your monthly obligations. Being debt-free, or minimally indebted, gives you incredible flexibility and reduces financial stress, which is crucial for making rational decisions during chaos. Imagine trying to buy stocks when your credit card payment is due and you just got laid off. Not a vibe. Defensive positions, literally shift some of your portfolio into more defensive assets. Think consumer staples, people still need toothpaste and toilet paper, even if they're broke, utilities, electricity isn't optional, and healthcare, sick people still need medicine. These sectors tend to be less volatile during downturns because their demand is relatively inelastic. It's not about making huge gains here, it's about preserving capital so you have something to reinvest later. It's like moving your valuables to the highest ground before the flood. Section 3, the blood on the streets strategy. When everyone sells, you buy, and win. Alright, the sirens are wailing. The news is a dumpster fire. Your TikTok feed is full of financial gurus crying. This, my friends, is your moment. This is when the smart money makes their generational wealth. As the old saying goes, buy when there's blood in the streets, even if the blood is your own. Asterisk targeting the undervalued asterisk during a recession, perfectly good companies often get thrown out with the bathwater. Look for companies with strong balance sheets, consistent revenue, good management, and a clear path to recovery. These are not necessarily the sexy growth stocks of the bull market. These are the boring, reliable businesses that got unfairly punished by market sentiment. Do your due diligence. Don't just buy anything because it's down 50%. Understand why it's down and what its long-term prospects are. Asterisk dollar cost averaging, DCA, like a boss asterisk this is where that dry powder comes in. Instead of trying to time the absolute bottom, a fool's errand, don't even try it, deploy your capital consistently over time as the market drops. If you have $10,000 to invest, don't dump it all in at once. Invest $1,000 every week or every month as the market continues its downward spiral. This way, you average down your cost basis and capture more shares at lower prices. When the market inevitably recovers, you'll have a much larger position at a significantly discounted average price. It's like getting a consistent discount code for your favorite store, but for stocks. Asterisk bonds, believe it or not asterisk in a flight to safety, government bonds, especially U.S. Treasuries, can perform well. As interest rates might be cut by central banks to stimulate the economy, existing bonds with higher yields become more attractive, increasing their value. They also offer a safe haven for your capital while you wait for equity prices to stabilize or bottom out. Think of it as putting your money in a secure, albeit slow, vault while the stock market is doing gymnastics. Section 4, Sector-Specific Plays, Where to Hunt for Bargains. While broad market buying through ETFs is solid, knowing which sectors typically rebound strongest or offer unique opportunities can supercharge your recession gains. Asterisk tech rebound asterisk once the initial panic subsides, growth-oriented tech companies that were previously overvalued but still fundamentally strong can offer massive rebound potential. Think about the post-dot-com bubble or post-2008 crash. The strongest tech companies not only survived but thrived. They become incredibly cheap during a recession, presenting incredible entry points for long-term growth. Asterisk industrials and materials, cyclical gems. These sectors are highly sensitive to economic cycles. When the economy starts to show signs of recovery, demand for their products, construction, manufacturing, raw materials, surges. If you can identify the turning point, these can offer explosive returns as the recovery takes hold. It's a riskier play, but the payoffs can be huge if your timing is decent. Asterisk value stocks asterisk this is where the true bargain hunters thrive. Companies that are trading below their intrinsic value, often with strong assets, low debt, and consistent earnings, but are out of favor. Think old-school manufacturing, certain financials, or even some retail. These might not be the sexy growth stocks, but they are the bedrock that often gets overlooked until their value becomes undeniable. Section 5, The Mental Game, Don't be your own worst enemy. All the strategies in the world mean nothing if your brain turns to mush when things get tough. This is, without a doubt, the hardest part of profiting from a recession. Asterisk master your emotions asterisk fear and greed are the two biggest enemies of investors. During a recession, fear will be screaming in your ear to sell everything. Ignore it. Remind yourself of your long-term goals. Remind yourself that history shows markets always recover. Panic selling locks in losses and robs you of future gains. Your phone's portfolio app is not your therapist, don't check it hourly. Set a plan and stick to it. Asterisk tune out the noise asterisk the financial media, your Uncle Bob, that one dude on Twitter, they'll all have hot takes and fear-mongering predictions. Most of it is garbage. Focus on data, fundamentals, and your own well-researched strategy. Less noise equals more clarity. Trust your own due diligence, not clickbait headlines. Asterisk long-term vision asterisk recessions feel endless when you're in them, but they are temporary. The average recession duration since World War II is about 11 months. The average bull market lasts significantly longer. Understand that you are investing for years, not weeks. Every downturn is a blip on the radar of a long-term compounder. If you can zoom out and see the bigger picture, the short-term volatility becomes less terrifying and more like an opportunity to add to your holdings at a discount. Section 6, Post-Recession Rebound, Cashing in on your genius. Once the recovery starts to take hold, which it always does, your strategically acquired assets will start to rebound, often dramatically. This is where your patience and foresight pay off. You can either hold for further long-term growth or, for some positions, selectively trim them as they reach fair value or become overvalued again. The real trick here is knowing when to start taking some profits, or rather, rebalancing your portfolio. As the market heats up again, those defensive positions might become less attractive, and your growth stocks might become overvalued. This isn't about perfectly timing the top, but about adjusting your risk exposure and locking in some gains to redeploy into future opportunities or simply enjoy your newfound wealth. So, there you have it. The secret isn't some mystical trading algorithm or insider tips. It's about understanding economic cycles, preparing diligently, acting counterintuitively when everyone else is panicking, and having the mental toughness to see it through. While the masses are losing their shirt, you'll be building your empire, one discounted asset at a time. It's cynical, sure, but it's also brilliant. And it works. If you found this masterclass helpful, smash that like button, subscribe for more truth bombs, and let me know in the comments, what's your go-to recession strategy? Stay savvy, stay cynical, and I'll catch you in the next one. Peace out.